Dealing with a period of drawdown is something every trader must face in their career. It's not easy, it's not fun, but unfortunately, it is a reality. In today's video, I'm going to give you two options on how to deal with such a scenario. Okay, gang, Akil Stokes here, head trader and trading coach at tradingpower.com. Thank you once again for joining me for my weekend review video. I had a whole different video planned this week, and then, well, just because of mainly the actions of today, I wanted to cover the topic of drawdown. As I mentioned earlier, it's not easy. It's a difficult time for all traders, but there's only two ways out of a drawdown. The first way is the easy way. Just quit. The easiest way is just quit. Just give up. Either dump your strategy, go find something new, hop to the next best thing, or just quit trading in all. That's the easiest way out. Number one. The second way, the more common way, especially if you're watching this video, because I'm assuming you're interested in trading and you want to become a professional trader and you're really driven to be successful and earn your way towards financial freedom. The hard way and the way that professional traders take is you got to trade yourself out of a drawdown. That's the only way. Think about it. If you've done your back testing, you should have a belief in your system and strategy, right? You should also have some numbers that tell you over time, I should be this much efficient. I should be a 60% trader. I should be a 70% trader. I should be a 50% trader. Little known fact, most professional traders, most successful traders aren't 80, 90% traders. They're somewhere in that 50, 60 range. Sure, you have some that are very high percentage. Sure, you have others that are very low percentage that are both profitable and successful. But most range between that 50 to 60%. So that means out of every 50 trades they take, they're taking about 20, 25 losses. Now, there's nothing in the rule book that says how those losses have to come. Those losses can come one at a time. You can win two and lose one. You can win three and lose two. You can also lose 6 in a row. You can lose 10 in a row. You got to have faith and you got to have a true belief system in your strategy that over time, the numbers are going to work out. And that means you have to trade every opportunity that meets your rules. So that's the not the easy way out of it, but that's the way if you want to be successful, that's the way you got to take. Now, we actually covered this topic in my live room today. I'm going to show you a brief flashback clip of that, and then we're going to go over to the higher time frame, and I'm going to talk about how you can relate this or how I related this to the dollar-yen pair. Now, I'll tell you what, guys, this is the hardest part of trading. This is the hardest part of trading. Taking loss after loss. We're 0-2 today. Taking loss after loss, seeing a bat pattern busted out, seeing a Gartley pattern busted out, or whatever we took earlier today, and still being able to pull the trigger. That's the hardest part. What so many traders do is that they see dollar yen busted out. They see euro dollar busted out. They see pound dollar busted out, pound yen busted out. And they say, you know what? Today is just a losing day, right? The market gods just aren't with me today, right? Today is just a losing day. I'm just gonna stop, or I'm gonna skip this trade because the last two lost. Have any of you ever done that? You take 2 or 3 losses in a row, you see this next one, you're like, oh, I'm going to wait this one out because the last 2 lost, right? Am I the only one that's ever done that? Come on. Make me feel comfortable. It acts like, oh, God, yes. Seriously, that's the hardest part. The only way to get through a drawdown is you got to trade through it. This is where your back testing comes in handy. This is where really trusting your system. If you don't have a true belief system, if you don't have full trust that your strategy works, it's very hard to keep taking these things. If you don't believe in bat patterns, you're like, Akil, why would I take this? And it's very hard to do so. For the trader that has trust in their system, not only, if they're disciplined, they don't have a choice. They have to take it. I don't have a choice in this matter. I could lose 10 trades in a row. I have to take this trade or else I'm breaking my rules. For me personally, breaking my rules is the cardinal sin. That's worse than anything else. But for a trader that has confidence and a belief in their system, they know the percentages. And as Lax says, you say, then you find, you skip this pattern, or you skip whatever pattern you decide to take, you miss out on. You come back, it winds up being a winner, and then you're even mad. You even madder. Okay, so in front of you is a chart of the dollar yen on a 60-minute time frame. I want you to look at it for a second. Ignore that little gap in there. Look at it for a second and see if you can identify, I think it was 3 or 4 advanced patterns. So looking at dollar yen, let's look at it one more time, the path we kind of took starting in January. The first pattern we had was a cipher pattern completion. We had an X to A to B, B to C, and a CD completion down here. This was also a bat pattern, all depending on how you drew it in. Now these were higher time frame. These were based on the 4-hour chart. I'm showing you on the hourly because I just don't feel like zooming out and zooming back in. I want to give you guys the full picture, but our first trade was a cipher and or a bat here. You can see that obviously went up, was a nice winner. Now if I zoom in some, the next trade we had on pound or on dollar yen here was a Gartley pattern. We had an X to A to B, B to C, C to D completion up here. As you can see, the market blew right through that Gartley, giving us a loser. So one winner, one loser. This is why it's important to stick to your plan. This is why it's important to do that predictive analysis, because right after that Gartley pattern loser, what do we have but X to A to B, B to C, C to D. Another cipher pattern completion. This one, again, rolled over for target 1 and target 2. Traders that stuck to their plan, traders that were disciplined, caught that profit, and it more than made up for the loss on the Gartley. Traders that got frustrated after the Gartley, maybe they had 3 other trades on some other time frame that got them angry, and they said, I'm not taking it no more because cipher patterns stink. Well, they missed out on not only a winner, but they missed out on covering up their losses as well. What happened right after that cipher pattern? Check this out. Another one. X to A to B, B to C, C to D. Once again, cipher pattern completion, market blowing right through for a loss. What's next? I didn't show you this on the picture, but X to A to B, B to C, C to D, right down here, bat pattern completion at 103.14, I believe it is. Let me check. Yeah, 103.15, bat pattern completion. Now this one is just in progress. I don't know whether it's going to lose or whether it's going to win, but the point is it doesn't matter. It's a bat pattern. I have to take it. Someone asked me in a live room this morning, Akil, not this particular trade, but Akil, we're looking at one of the day trading pairs. Said, Akil, are you going to take your bat? Are you going to take this bat pattern? I said, yeah, I don't have a choice. My plan says I need to take every single bat pattern. That's how I have to stay consistent. So whether I like it, whether I'm happy, whether I'm up a million pips and I'm scared I'm going to blow some, whether I'm in a 10 trade losing streak and I'm frustrated with my patterns or frustrated with my my strategy, I have to take it. Based on my back testing, based on my historical results, I got to take every opportunity if I want to reap those benefits. So I'm long this bat at market. A target 1 on this bat will more than make up for the 2 position loss on the cipher pattern. You got to take these things. So I know that wasn't the best example in the world, but the point I was trying to make is you just got to keep trading through these patterns, guys, or through these setups. If you're taking 3 losses in a row, you got to take the 4th trade. The only way, and it's a difference, it's not revenge trading. You can't just make up some stuff and trade it. You just got to follow your plan and really trust. That's what's going to get you through. Now, before we end this video today, I want to talk about, I got a question from one of our syndicate members, tweeted me a question and asked about trailing stops. I think he the tweet was about New Zealand dollar. So let's do a brief lesson on that, and I'll let you guys go for the weekend.
So looking at the Kiwi here, I'm going to draw it out. We had a bat pattern completion on here earlier in the week as well. Looking at swing high to swing low, X to A to B, B to C, C to D down here. Our target ones were somewhere in this area. I think I had mine right under the 83 even handle. Target ones were about right here. Boom. Target twos were right above this structure level. Now, as the market came up, because we had a straight shot up on the Kiwi, I actually couldn't trail this at all until very late. I was only able to trail once, and guys, I trail based on structure, so I pay attention to the ebbs and the flows. I use my new structure high principles, outside return principles on determining where I trail stops at. We never got that. The market basically just shot straight up, and then we consolidated in a flag type of pattern that didn't really end up being a flag. Now, when we got our new structure high right here, our higher high, higher close, what I did was I took my trail stops from break even, because after target one, got to give them the break even. Took them from break even and rolled them right underneath this structure, this zone. And you see I was stopped out on the second half of my position for a little less than what I got on target one. Now let's go to one more example to see if we can see if I can give you a live example. I'm in a pound yen trade right now, and let's go here to the 4-hour chart on pound yen. I'm in a pound yen cipher trade here. Initially, our stops were up here, and again, I told you guys this was a big trade. Initially, our stops were up here on pound yen. As soon as my target one was hit, I took my stop loss, adjusted the position size, make sure I only have one contract left on there because I'm only trading one. I don't want the market to reverse and I get, wake up to a surprise that I'm long the other way. But I roll my stops from here to break even. Now, I can't really roll them anywhere else right now because we don't have any structure created. Now, what we can do is we can go down to a lower time frame. We can go to the 60-minute. And if you want to get aggressive on the 60-minute, here's what I would do. Where's our stops? Stops are right here at break even. You can see that we have a little ebb and flow in our structure. We have a lower low, lower close beneath right here. We've got an outside return, and then we've got a new structure low. If you want to trail aggressively, I'd get these. I wouldn't have them much higher than this outside return level, and I would just keep watching the market as it ebbs and flows. Now, the pros of that is, well, if this market reverses and comes all the way up, you bank in some extra profit. The cons is, well, if we see something like this, because remember on the 4-hour chart, our trading time frame, we never created an outside return. So if we get an outside return on the 4-hour chart, that comes up and stops you out, and then the market proceeds to go down to your would-be second targets, well, you're out of luck. So it all depends on how aggressive you want to be with trailing your stops. It's definitely trade management is a key to being successful, but you don't want to be overly aggressive and put your stops in a position where you're going to get stopped out, and you really shouldn't. So I know that was brief. I don't have a lot of time on these weekend reviews, but I did want to get that. I did want to address that since I forgot to do it in this morning's syndicate video. Uh, better late than never, right?
Okay, well, I bid you guys farewell for the week. Another interesting week, not too good in day trading, pretty good in my swing trading, and well, all we can do is wake up and do the same thing the next day. Now, syndicate members, for those of you that are that have the desktop software, I'm going to be doing something a little different. I'm going to get more detailed. I've noticed from some of you guys that, well, many of you are new and you're not really sure. You're not really, you know what the patterns are, but you're not really sure how to trade them, where you should enter, where you should exit. So I'm not going to try and be, I am going to be a lot more detailed with the post I put in there. I'm going to let you know, hey, this is where I'm getting long at. This is where my stops are going. This is where I'm looking for targets at, just to give you a better view, a better idea of what's going on with the entire trade. So I'm getting excited about that and just trying to respond to the feedback that you guys have given me. Speaking of feedback, if you stay for a little bit after the video, I'm going to flash through some of the kind feedback I've got throughout the week. And well, just in advance, I want to say I appreciate all the kind words that you guys have given me. Now, if you can do me one favor, I've got this little goal. I'm trying to get to 2,000 subscribers by the end of January. I'm close. I'm only about 50 away. So do me a favor, like this video, share this video. If you're watching this and you're not subscribed, come on, just do it. Just click that little button right there, right next to my face. Um, I would really appreciate it. Until next time, plan your trade, trade your plan, and good luck tomorrow.